The Bank of Japan joins the monetary easing club with 80 trillion yen worth of government bond purchases. There's some bang for their buck already, the yen falling to its lowest in a month. The BOJ, the latest central bank, stepping in with stimulus action to help the global economy back onto its feet. Is it enough? Let's get to Stephen Saywell, head of FX strategy, BNP Paribas. Hello there, Stephen.
Hello.
The yen has come off. How likely is that to last, do you think?
Not very, is certainly our opinion here at BNP Paribas. Clearly, this was expected in the market, the fact that the BOJ would ease. They have eased, and they've eased by more than the market was anticipating. But our view is, if you compare the size of the bazookas, the Fed has a much bigger bazooka than Japan does. So in our mind, the dollar is likely to continue to weaken across the board. But also, we think dollar yen is going to fall as well. So
where's dollar yen going?
Well, we think it's going back to the lows and potentially new lows. We think we can move down to 77, the 76 level. The big threat, of course, here is, in addition to monetary easing from the Bank of Japan, we could have outright FX intervention from the Ministry of Finance in Japan. That certainly remains a risk.
And does the euro face the same problems that the yen faces in light of this Fed bazooka?
Yes, absolutely. Our view is that the key theme for FX market, certainly, let's talk between now and the end of the year, so the next 3 months or so, is likely to be dollar weakness. So one big call we've had here at BNP Paribas, I've had it for some time, since back in June, is we think the euro is going to rally towards 135 by year end. Looked a bit of a very aggressive call when we were down at 121, but clearly back up here at 130, 131, it's much more achievable to get to this 135 level by year end.
All right, so no weaker euro to help our exporters then?
We don't think so, not at all.
All right, minutes from the Bank of England, flagging inflation risk. Most economists seeing more QE to come, topping out, I think, at 425 billion. Do you go along with that, and where does that take sterling?
Well, we do. We go along with the quantitative easing call. Our view here also is probably November we'll have further balance sheet expansion, either to 400 or 425 that you spoke about. Interesting when we look at the impact on sterling, because in contrast to the dollar and the Fed, Bank of England quantitative easing hasn't had much of an impact of weakening sterling. And probably it's a bit like Japan, that the Fed is the most dominant, the biggest player in the markets as far as QE is concerned. So we think sterling will actually reach new cycle highs against the dollar. We're targeting 173 on cable by year end.
All right. When does all this easing turn inflationary as far as you're concerned, as the Bank of England warns, and when does it end?
Well, I think certainly the recent trend in inflation in the UK is actually been downward, and certainly suggests to us that even when it was high, the Bank of England was willing to tolerate inflation in the short term as a corollary of kick-starting the economy. So we think that's going to continue to be their focus. We think they're going to continue to focus on growth. If they're successful there, we think that's one of the factors that's actually going to help sterling. So I would actually go out on the limb and say not only is sterling going to appreciate against the dollar, it will also outperform the euro.
Stephen, thanks for talking with us. Stephen
You're very
Saywell,
welcome.
BNP Paribas. Turning to stocks, the world's biggest fashion retailer, Inditex, notching up a 32% jump in first-half profit to 944 million euros. The Spanish owner of the Zara and Massimo Dutti chains boosting its fortunes with fast-changing fashion offerings and a drive into new emerging markets. The stock up over 45% on the year, far outperforming the struggling European retail sector. Mintel analyst Richard Perks says targeting its appeal is the key to Inditex's success.
At that younger end of the market, fashion is international. So Inditex can roll out its brands, particularly Zara and Pull&Bear and brands like that and Bershka, around the world, and will get instant recognition. And on the back of that, it's building a terrific online business as well.
That's what we're watching in the markets this lunchtime. There's more on Reuters.com and the Insider platform, of course. And join us each weekday for Market Pulse, a snapshot of what's moving on financial markets and why. I'm Axel Threlfall. This is Reuters.